hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friend Sam Clement. Sam, say hello.
Hey, John, how are you doing?
Doing very well. I hope you're doing well today.
I am. It's a good day so far.
Yeah, so far so good. Now, yesterday, Sam, I got to tell you, I did my first in-person economic presentation in quite some time. Thanks to COVID-19, last year I made very few in-person presentations, and pretty much all of them were in the first quarter of the year. And then after that, did nothing but Zoom presentations, really, Zoom presentations. And those are very easy because all you did was just stare at the camera on your computer and you have your presentation up right next to it. So
Yep.
no stumbles, no mumbles, no nothing like that. However, yesterday I started off the presentation even by saying that, it's been a while since I've spoken in public, so I might be a little bit rusty. All told though, I thought it went pretty well. Had a lot of questions during the questions and answers. And then I will tell you, one of the questions was about energy. And frankly, this was a pretty good question. And what this person said was, what should we think about energy? For so long, we've been hearing that it's dead in the water. It's never coming back. Last year, this person said crude oil prices even got to -36, -$37 during the month of April. You remember that? And now, now here we are in June of 2021, and crude oil's at $70 a barrel, and people are buying more automobiles than they ever have. So what is it about crude oil? Is it dead? And that was their question, which really wasn't a question in my estimation, just in this there. But in any event, what I said was, the thing about saying this time is different. Every time I have said that in my life, both personal and professional, I found out something, Sam. It is actually less different than I thought it was. Your thoughts on that?
Yeah, I mean, it's the market time and time again has gotten ahead of itself in pricing in things and pricing in events of the future. And this time, the negative oil was kind of a little different story, but the negative sentiment around energy as a whole has been the thought that it's going away, the thought that, all cars are going to be electric soon. And it seemed almost as if oil companies, energy companies were priced in for this immediate demise of something that is ingrained into essentially everything that we use, everything from paints, plastics to cars. I mean, it really is everything uses oil. And it just seemed like another one of those times where things got ahead of itself in the market and pricing in the some future event as if it was gonna happen tomorrow. And obviously with oil back up to $70 a barrel and see articles every week talking about whether it's going to 100 or not, that's clearly not the case. And the demand for it as we continue to reopen is unsurprisingly extremely strong.
Well, I think you're absolutely right. And, what we had last year was more of a wild exception than actually a norm. And taking a look at crude oil prices today and understanding that, the future might be in electric vehicles. It might be here in the United States. However, there are a lot of people out there in the world that don't have cars, that might not be able to afford a shiny new Tesla or even the new EV at the moment from whatever primary automobile manufacturer. Places in Latin America, places in Africa, places in India, where the internal combustion engine still might be the most cost efficient and efficient means of getting around. And then, Sam, you mentioned it. There are a lot of things that we make from liquid dead dinosaurs out of the earth. A lot of things, from clothing to plastics to different types of resins. I mean, so many things that it's almost difficult to believe that we won't be using crude oil in some form or fashion, although the preoccupation has always been on simply gasoline. Your thoughts?
Yeah, I mean, it's shocking how quickly the sentiment around oil and energy changed last year. I mean, there was people on CNBC saying, I don't understand why anyone would have any exposure to this sector. And this was at a time where, like you mentioned, I mean, oil was at zero. Oil was less than zero because nobody could take physical delivery of it. And it seemed to be pricing in this just kind of worst case, you turn off the lights and there's no more oil in the world that we're using for anything in our market. And it just didn't seem to be the case. And it reminds me a little bit of 2000. And I guess that's partially, the other side of the same coin, in the sense that, people were putting the words .com into their company name to get their stock price to go up, because everyone thought the future was the internet, and it was, but the future wasn't the internet in 2000. I mean, some of these things that were priced in didn't happen until this decade. I mean, that's over 10 years where a lot of the tech names were big underperformers because so much had been priced in as if it was happening immediately, when this was very early in the process. And to me, that reminds me, although it's kind of the opposite, it still reminds me of what we've kind of experienced over the last year with the energy sector.
Well, the thing is, you bring up a pretty good comparison in terms of the .com bubble. I will make one correction. It was more 98, 99 than 2000. That's when
Yeah.
it started to fall apart. And, people were saying this time is different. A guy named Henry Blodgett at Merrill Lynch was talking about you value internet stocks based on eyeballs. And the thing is, he wasn't wrong. He was just 20 years too early in his assessment.
Yep.
And people weren't wrong in saying this time is different. What they were wrong about was using that as a justification for an extreme. And in this case, in the case of the tech sector or the internet sector, it was valuations. And the same thing can be said of crude oil last year. Yeah, this time might be different. We might be consuming less motor fuel moving forward. However, when you use difference or different as an extreme, you're almost always going to get bitten by it. It's the same thing you can sit there and say with cryptocurrencies. This time is different. People were saying as Bitcoin gets to 60,000. Well, you're right. I mean, the technology is here to stay. Blockchain technology is here to stay. I think we'll be using non-fungible tokens forever. And I think cryptocurrencies and other blockchain assets will have some form or some place in most investment portfolios. But that doesn't mean that the investment itself or the prices didn't get ahead of itself. So
Right.
whenever you hear this time is different as an excuse or an apology for an extreme reaction, Sam, I want to tell you this. You're relatively new in your career here. Always take the other side of that. When that is the primary reason for anything extreme, go ahead and go short. Your
Yep.
thoughts?
Yeah. I mean, you hit the nail on the head by saying anytime that it's a time to step back when people start adamantly saying that this time is different, and we're going against the grain of history. I think that's usually a time to be cautious, and that's what I felt like we're experiencing a little bit last year with what I mentioned. People saying you should have zero exposure to the sector, which is an extremely, extremely bearish bet on something. If you're going to say you have zero exposure to it, especially for a normal equity sector. And I do think oil prices can likely continue to go higher in the short term. I mean, people talk about the supply of it and the demand continuing to increase over this year with everything reopening across the globe. Really, I mean, and there's still a lot of oil rigs offline. I mean, there's a lot of companies who got burned last year with rigs online, and they're a little weary to put those back online. And so it doesn't take too much of a stretch of the imagination to picture oil prices going high, even if you told me that by 2050 we're going to not be using oil in the same capacity that we are now.
I mean, how can I refute that? I want to refute that. I want to trade perspectives with you on that. However, that's just, I think, just kind of spot on. Absolutely spot on. I think my comments about cryptocurrencies are spot on. I think the comments that we've made about internet stocks back in the day, I think those are spot on. I think really, again, going back to my previous comment, whenever you have the extremes and when you're using this time is different as an excuse for an extreme, just watch out below. And I can point to another example. Not so long ago, remember our old favorite GameStop, you
Yep.
know, GameStop. I mean, listen, the business model is blockbuster all over again, in my estimation. It's going to be difficult for that firm to really ramp it up unless they get just, I mean, miracles happen. So the right thing to do was probably short the stock, sell it if you have it, right?
Yep.
I mean, its business model is no longer. However, everyone had the same idea at the same time. Everyone was saying this time is different. This company is going out of business, and they shorted the stock. Short interest on the stock was what,
Yeah.
70%?
Yeah. Upwards of 100% at times.
Yeah, yeah. So I mean, if everyone's making that and saying this is what's going to happen, Sam, what are you going to do? What is the smart thing to do?
Yeah. Yeah.
Do the opposite of it.
Right.
The same thing with AMC
Yeah, I
and
mean, AMC is still at less than, half of the people viewing the movies in a theater that they were in 2019, and people are out there saying, "Oh, they're turning it around. This has been great. Look at the recovery from the lows." Well, I mean, you look at it compared to this time at the last normal year that we had of 2019, and it's pretty abysmal numbers still. It's it's not an industry that's coming back at any time. I mean, even more so than GameStop to me. A company like that is it's not likely that they're making a strong comeback. However, the stock has gone from less than $2 a share to upwards of 50, $60 a share at times.
so so the thing is, I guess the message that we have here today for anyone listening is, whenever you have extreme valuations in the markets, whether it be internet stocks, energy prices, cryptocurrency prices, stock prices on companies whose business models have either exploded or are very antiquated. Whenever you see these types of things, don't fall for what MSNBC, what the headlines are saying, what pundits are saying on the TV, what you might be hearing at cocktail parties or coffee minute at church or wherever you worship. Don't fall for that, because this time's really not all that different than any
Well,
previous time. And
and
go ahead.
it falls into the term I used recently. It's my new favorite term is righteous investing. Is
I like
people
it.
who I mean, people who think that energy is awful and there's no reason you should own it, and we're getting rid of it as quick as we can, and that just leads to this. I don't think it should have any value. I'm going to invest in it as if it has no value, and that's when you get into trouble. That's when you get people who have looked at the what the Federal Reserve is doing and say, I'm going to load up on gold for the last 7-8 years because the Federal Reserve is ruining things. Well, even if that's the case, I mean, clearly you've lost out on essentially the entire run up of this bull market by that righteous investing. And it's something that essentially never pays off if you are investing from that point of view of this should be worth this, because of your personal take, and instead of understanding where the market's going to take it and supply and demand.
It's interesting that you bring up the Federal Reserve, because I used that actually as part of my presentation yesterday, talking about the Federal Reserve and, oh, one of the tailwinds that the U.S. economy has behind it, probably the biggest one, is the Federal Reserve has turned on the liquidity spigot in the financial markets. And I mentioned how investors can try as much as they want, but they can't fight the Fed.
Yeah.
And I mentioned that term, righteous investing. I could sit there and pound my fist on the table and be absolutely right, but I can't fight the Fed. The Fed is going to win not 7 times out of 10, not 8 times out of 10. It's going to win 10 times out of 10. And I can sit there, Sam, and here we go. We're going to bring this full circle. I can sit there and say, this time is different. This time the Federal Reserve has exploded its balance sheet to 8 to 9 trillion. This time is different. Bad things are going to happen. And yet, if I had taken that tack this time last year, how much money would I have foregone by keeping my money in cash and gold and other traditional hedges, as opposed to simply realizing this time isn't as different as I might think, and I might as well get a glass of whatever punch the Federal Reserve is serving up. Your thoughts, Sam?
Yeah, you would have missed out on one of the most historic runs in the market. Obviously, it was coming from a historic, sell off and a historic low, I guess, in relative terms. But yeah, I mean, you saw a lot of people do that saying that the Fed's not going to be able to recover from this. And, there's an argument that at some point it will come back to bite them, but they've done a good job of doing what they said they would do. They've done a good job of shoring up the corporate bond market, whether they had to do much to do that or not, or just, wave their wand and say they would buy everything. They've done a pretty good job of doing what they said they would do. And so now it's a matter of, we've done the takeoff, and it's how are they going to land? That's the second most dangerous part of a flight. And, that's the part that everyone's talking about now is how are they going to land this?
Well, you bring up a really good point. It kind of takes us back to sort of comments that I've made previously, and you've alluded to that. Something, this time might be different. It is different that the Federal Reserve has blown up its balance sheet the way that it has. It is a little bit different that we have electric vehicles that have the strength enough to pull heavy loads. It is a little bit different. The internet is a different technology, or was a different technology. However, when we use that word different as an excuse for ridiculous behavior on our part as investors, or stupid behavior on the part of investors, then that's where you take the other side of the bet and you almost go counterintuitive. Yeah, this time is different. However, it's not going to be as different as much as you think. When you start seeing, people with a $500,000 line of credit and a business model that says .com and it's being valued at $10 billion, no, sell it. Just absolutely sell it. When you see crude oil at $36, negative $36 a barrel, and people saying EV is going to kill it, I don't care what you have to say, buy it.
Yeah.
I mean, so when you see Bitcoin at 60,000 and people were saying, after being at 10,000 not too long ago, people were saying, watch out. I mean, it's going to keep on chugging. Yeah, maybe, but been here before and I've seen the way this plays out. I'm going to sell it. And then when people say, the Federal Reserve doesn't know what it's doing, and I'm going to load up on gold and cash, you can have it, man. I mean, they might be wrong, but they say they're right. And unfortunately, if Jay Powell says there's no inflation, Jay Powell says there's going to be a soft landing, Sam, what is there going to be?
No inflation and a soft landing.
It doesn't matter what I think. Just be smart and understand it's never as different as you might think. Sam, yep. What do you think?
Yeah, I think you got to be like those little fish that swim along the sides of a shark. I don't even know what those things are called, but I think you get the picture. I think that's a pretty good spot to be in.
There you go. Well, guys, thank you all so much for listening. We always love to hear from you all. So if you have any comments or questions, by all means, please drop us a line at tradingperspectives@oakworth.com. If you'd like to read any more or hear any more of what we have to say or how we think, by all means, please go to that same website, oakworth.com, and take a look underneath the Thought Leadership tab for all kinds of good information. With that, I'm going to give you another chance to impart some wise wisdom on everyone listening here today.
That's all I got.
That's all I've got today, too. Y'all take care.